Aotearoa, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. The world is looking for even more workarounds to avoid having to deal with a Trump America. First, however, this week is going to be a busy one locally, with important data releases on December retail sales, another less-than-inflation tiny rise is expected, and the fourth quarter CPI data expected to hold at 3%. But a higher-than-expected result will likely bring outsized financial market reactions. There will also be another full dairy auction on Wednesday. In Australia, it'll be all about their December jobs data, and a good bounce back from the unexpectedly weak November result is being looked for. Globally, the most interest will be on the big data dump from China this week. Their fourth quarter 2025 GDP growth is expected to slow to 4.4%, dipping their full-year expansion to 4.9%. House prices, retail sales, and industrial production data is also due there, and they're all expected to be tame. Their central bank will review its loan prime rates, but no changes expected from their already record low levels. In Japan, their central bank will be reviewing their policy settings, although no changes anticipated this time either. However, there is intense interest about the possible future rate signals. Central banks in Indonesia and Malaysia are scheduled to announce monetary policy decisions as well. In the US, financial markets will be closed tomorrow for Martin Luther King Day, but then they will release key data on inflation, the PCE version, as well as the second fourth quarter 2025 GDP update. But most interest will be on the flood of fourth quarter 2025 corporate earnings reports dominated by their big industrials. Over the weekend, there were important data releases from the US too. Industrial production rose marginally in December from November to be 2% higher than year-ago levels. And the NAHB Wells Fargo Housing Market Index retreated in January from December and back to October levels, and 21% lower than year-ago levels. Builder sentiment deteriorated across all components of the index. And the New York Fed's regional services sector tracking reports yet another sharp contraction in their region in January, although not as sharp as in December. US data is often confusing, telling different stories, enough so that all sides can claim victory. But some overarching measures paint a tougher story. Inflation feels like stagflation to most consumers, and that is confirmed by the latest data on the share of economic activity flowing to workers. It is now at its lowest level ever since this series began 80 years ago. It is a telling data series, one that has dived fast recently. Across the border, Canadian housing starts turned up in another strong result in December, up by 11% from November to its highest rate in 5 months. That caps a good full year, up 5.6% in 2025 from 2024. And the Canadian Prime Minister has been in China and has negotiated a truce with Beijing in their tariff tussle. The Chinese will now import large volumes of Canadian crops in return for up to a 49,000 car concession for Chinese EVs. These will displace US-sourced EVs. The Canadian farm lobby is happy. Their car manufacturing lobby isn't, though. China continues to run down its holdings of US Treasury investments, with them falling 11.2% in November from a year ago. Their holdings of US paper drops them to third place behind Japan and now the UK. Malaysia's economic activity continues to impress. They recorded fourth quarter 2025 GDP growth of 5.7%, with a strong factory sector supported by strong internal demand. And Singapore's non-oil exports rose 6.1% in December from a year ago, a moderated pace of growth from November. Their refined oil export grew at more than twice that pace. This means that Singapore's non-oil full-year 2025 exports came in 4.8% above their equivalent 2024 level. The US Treasury 10-year yield is now just on 4.23%, unchanged from this time Saturday, but it's higher since September. And the price of gold will start today at $4,596 an ounce. That's up $15 from Saturday. Silver is now just under $90 an ounce. And American oil prices are down 50 cents at just under $59.50 a barrel, while the international Brent price is now just on $64 a barrel. And the Kiwi dollar is little changed from Saturday, now just over 57.5 US cents. Against the Aussie, we're also little changed at 86.1 Australian cents. Against the euro, we're up 10 basis points at 49.6 euro cents. That all means our trade-weighted index starts today at just over 61.7 and up 10 basis points from Saturday, up 20 basis points for the week. And the Bitcoin price starts today at $95,130 and up 0.6% from Saturday. Volatility of the past 24 hours has been very low, at just on plus or minus 0.3%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. We'll do this again tomorrow.